So we'll just wait for 1 more minute and then Ivo can start to introduce.
Yep.
And we're live.
Good morning, afternoon, and evening. Welcome to this online conference, Who Benefits from Economic Growth and Recovery Plans, entering a new era of inequality data. The conference is jointly organized and hosted by the United Nations Statistics Division, United Nations Development Program in New York, and the World Inequality Lab in Paris. My name is Ivo Havinga, and I'm Assistant Director of Economic Statistics of the United Nations Statistics Division at UN headquarters. It will be my pleasure and honor to be your moderator for this first segment on the statistical aspect of distribution accounts. This segment will be followed by policy dialogue in the second segment, which will be moderated by Lucas Chancel from the World Inequality Lab. We are supported by Olivia Ronsin from the World Inequality Lab and Herberto Tapia from the Human Development Report Office in New York. This conference is timely, with the distribution of income, wealth, and consumption being a central element of the 2030 agenda. With the emerging evidence of COVID-19 pandemic having a serious impact on social inequality, addressing inequality become a central theme in the discussion on building forward better, with a focus on well-being and inclusiveness and a sustainable, resilient recovery after the COVID-19. Another element is important. The system of national accounts, with its first release in 1953, has been an essential element in the development and design and monitoring of public policies. The revision of the 2008 system of national account is a key moment for the global and the statistical community on discussing the new sort of policy agendas to be informed by the system of national accounts. With the emerging new demands for integrated monitoring of our changing societies and environments, the United Nations Statistical Commission has launched the revision of the system of national accounts. This revision is based on an agreed research program, which includes distribution accounts under the theme well-being and sustainability. This revision has the objective of broadening official national account statistics and bringing the measurement of economic activity closer to the outcome of people. With that, I have the pleasure to go to the first element and ask Lucas Chancel to make his introductory remark. Lucas, the floor is yours.
Thank you very much, Ivo. Let me share my screen. And let me start by thanking you, Ivo, by thanking the United Nations Statistics Division, the United Nations Development Program for partnering, for co-hosting this event with the World Inequality Lab. The rationale for this conference is that there is a paradox of the digital age. Data is everywhere. Inequality is prominent. It is rising in many nations. And at the same time, public statistics and governments too often lack the basic tools and information to track properly who benefits from economic growth. This is an issue for policymaking. This is an issue for civil society and democracy, for whom it is difficult to assess the actions of governments. And this is also an issue for business, who do not know in which environment they operate. Now, statistical agencies and governments, as Ivo has reminded it, have been producing statistics, economic information for the past 70 years, thanks to the system of national accounts since the early 1950s. And under this system, each and every country in the world produces every year or every quarter estimates of gross domestic product or national income, which inform on the evolution of production or of aggregate incomes in the economy. The issue is that beyond aggregate values, beyond averages, we do not know really who is benefiting or who is losing from economic reforms. So it is extremely important, as we are now thinking about the recovery, as we're now thinking about building forward better, that governments have at hand the set of tools that makes it possible to understand who is winning and who is losing from economic policy making. And a large number of voices are calling today for the opening of a new chapter in the system of national accounts, a chapter in which the question of the distribution of growth is going to be central. Now, perhaps just to illustrate this message, one graph here. This graph to me shows why what we're talking about matters. And this is the big picture, so to say. This graph has been termed the elephant curve of inequality and growth. And what you see here is how global economic growth has been distributed, has benefited to the global population, to the totality of the global population over 1980 to 2060, to the eve of the recession, so to say. What we see of the current COVID recession, what we see here is the poorest population of the world on the left-hand side of the graph and the richest individuals on Earth on the right-hand side of the graph. For each global income group, you see the growth rate at which they have, at which their income have evolved over the past 4 decades. And what is apparent from these results is that some have benefited a lot from globalization, large growth rate. That's a positive message about 4 years of economic growth, rise of emerging countries on the left-hand side of the graphs. But the picture has been much more mixed in other parts of the world. And you see the squeeze bottom 90%, the squeeze middle class or working class in many industrialized nations. In particular, when we contrast these growth rates to what has been happening at the top 1% in their country, this can create frustrations. This can create tension. And it's extremely important that government can have this kind of picture, not 40 years down the line, but each and every year, being able to know how GDP growth benefits to each and every income group. So far, we do not have this information. And in many countries, the state of quality data, of economic inequality transparency data is very poor. This graph shows an index of economic data transparency that the World Inequality Lab publishes and produced in partnership with the United Nations Development Program. And what we see here, there's one takeaway. All countries still have quite some work to do in order to improve the state and the quality of their economic inequality statistics. There's quite some work to be done in emerging nations, but also in the high-income countries. Now, I think that this is going to occupy part of our discussions in the first segment of this conference. And before I pass the floor to Pedro Conceição, just a few words on the World Inequality Lab. We are a collaborative, cumulative, open source project that we operate from the World Inequality Lab with 100 researchers located over the world. We collaborate with statistical institutions, international agencies, and governments to share data, to develop common methods in order to improve the state of inequality statistics across countries and at the global level. I think that one important part of our work is to make this cumulative. That is, our research, our methods, our data is published online so that other groups can come in and can complement the work that has been done with new sources of information or new methods when better economic inequality measurement methods appear. Perhaps ultimately, the goal here is to create global public statistics that are open to all, because we are committed to this idea of a global public inequality data service that would benefit to all countries in the world, and that is really here to empower democracy. So I really hope that this conference is one little step towards this overarching objective. And now let me wish you an excellent conference today.
Thank you very much, Lucas. With that, as you indicated, I'd like to turn to Pedro Conceição to make his opening remarks. Pedro, the floor is yours.
Thank you, Ivo. Delighted to be here with so many friends. UNDP is very proud to co-host this conference with our partners at the World Inequality Lab and our colleagues at the United Nations Statistics Division. So I wanted to just say a few words, in a way echoing many of the things that Luca has already alluded to. In the 2019 Human Development Report that counted with the collaboration of the World Inequality Lab, we argued, Luca used the expression a new chapter. We used an expression that was a little stronger. We argue for a revolution in metrics when it comes to the measurement of inequality. And the reason is that we documented in that report that there seems to be a disconnect or a dissonance between what worries people and the information that is made available to policymakers and to the public about what's happening when it comes to inequality. So we argue that it's important to understand much better, in much more detail, both what's happening in terms of the distribution of income and wealth, but also what happens in the distribution of other aspects of life that are important to people. Now, if that was already clear in 2019, with the COVID-19 pandemic, I think that this need for this revolution in metrics was put into even sharper relief. There's more and more evidence suggesting that the COVID-19 pandemic is actually exacerbating a number of inequalities, probably not all inequalities everywhere, but certainly many inequalities are being exacerbated as a result of the COVID-19 pandemic. One example that is better and better documented is what's happening when it comes to gender inequality, for instance. Women appear to be overrepresented in some of the economic sectors that have been more affected by the response to the COVID-19 pandemic, but also there is an indication that social norms related to the expectations of the role of women in childcare appear to be reasserting themselves. So we know that the pandemic is exacerbating gender and other inequalities, but there is still time to make different choices as we look and conceive of a world post COVID-19 pandemic. So I think it's clear that everyone aspires to post-COVID-19 world that is more inclusive, more sustainable. But it's very hard to see how we can get to that world if we don't have data to document what's happening, certainly when it comes to inclusion. I think it will be little more than a slogan, really, if we don't have the data that will enable us to understand what is happening when it comes to the distribution of income and wealth. It will be really like flying blind. And so that's why in UNDP we are happy with the partnership that we have with the World Inequality Lab to bring the work that we support, that World Inequality Lab does to policymakers and to the public at large. So we will hear over the course of this first hour some of the advances that have been made so far. But I think this seminar is really not about the past, it's about the future. So we are keen to continue with our partnership with the World Inequality Lab, and I'm very happy also to be joined by Stefan, Ivo, and our colleagues in the UN Statistical Division, because I think we are entrusting them to help us with this revolution in metrics that is needed when it comes to the distribution of income and wealth. And sometimes I think there might be a perception that the statistical community is not very, how shall I say, forceful in making changes, but I think this is wrong. And I think that the UN Statistical Commission adopted in March this year the system of environmental economic accounts, which was really a breakthrough that was shepherded by Stefan and his team. So this shows that very important changes are possible, and we need a shift of similar, if not more ambition, to the one that happened with the system of environmental economic accounts when it comes to the information on the distribution of income and wealth. So looking forward to the discussion today, and back to you, Ivo. Thank you.
Thank you, Pedro. I thank you for these opening remarks. Allow me now to turn to Stefan Schweinfest. He is the Director of Statistics Division. Stefan, the floor is yours.
Yes, hello and good morning, everybody from New York. What better way of starting a morning in New York, a rainy morning in New York, in Paris? The only way to improve that would be to be actually with you in Paris. That's very personal for me because I was a student there, so I certainly would love to have a good discussion around a table one day, and I'm sure we will. I'm in good company this morning. Thank you, Lucas and Pedro, for the introductions. And so I'm the statistician now at the table as the director of the statistics division. As a director of the statistics division, I'm also the secretary of the Global Statistical Commission, so really the Global Statistical Program. And one of the things, of course, what we do is we work on norms. Now, norms sound unpleasant. I mean, people immediately have ideas of straitjackets and so on and so forth, but it's not really true. I look at norms as enabling language. I mean, this is that norms actually connect the world, statistical norms in particular. They allow us to aggregate information, to compare over time and over space. They allow us to measure increasingly transnational phenomena and global phenomena. And in particular, what is for me the most important thing, they allow us to learn together and to share knowledge. So norms are for me an enabling language, and this is sort of the pride of my work here. Inequality is an important topic, and of course there is not only one inequality, there are many inequalities, but for me fundamentally there are two within countries and between countries, which is another reason why we need to urgently develop better global measures of inequalities. Now, one of our crown jewel in terms of norms is the system of national accounts. People have already made reference to the history going back to 1953. I've been in the UN Statistics Division for a long time, but it is a rumor that I was there in 1953. I wasn't. But I've been with national accounts quite a long time. I actually started with national accounts with the 1993 review. And one of the things that I learned even at that time is that it's not only technical. Statistics is never only technical. It is also political. You have to be relevant to the issues of your time. So what are the moments that define what are the elements that define this moment? Well, we have the SDGs. And I think the SDGs are an integrated development agenda, and that means we need integrated data sets. I mean, we have very good data sets in economics, in environment, in social, and so. But the call is now also for integrated information sets to make clear what are the relationships between those information systems, because politicians have sometimes to make difficult trade-offs. And I think we as numbers people are tasked to help them to understand the connections. Pedro mentioned the environmental accounting that we have been working on, and has recently ecosystem accounting has been our success story of the 2021 Statistical Commission. The area of the interaction between the social demographic and the human and economics is not yet as well developed, but I mean, that is a big challenge and task for us for the forthcoming review of the system of national accounts that is planned for 2025. We have just launched it. So, I mean, we are looking at a 4 or 5 year horizon. I know for some people that may be too slow. Nobody has ever accused statisticians of being hasty, but we do make progress, and it's very solid. And I think the letter that I always want to underline in the system of national accounts is a system. I mean, it allows to connect sectors with each other. It's a framework. It allows to connect the micro and the macro. And we just have to use the opportunity of this moment, also with the post-crisis management and monitoring and the digitalization that is happening all around us, to use this moment, to use this momentum to develop the distributional measures, the inequality measures, and as part of the system of national accounts, so that in 2025 and leading up to it, we will already develop and have better measures. I mean, everybody, when they hear SNA, system of national accounts, they all immediately think GDP, and poor GDP is just one number and can't do it all. The people in this room, they know that all very well. But again, as a system of national accounts, it is very powerful. And I think this conference for me and for all of us is very timely and opportune, because it allows to do two things. I mean, here where countries are developed and developing countries, so congratulations of putting this first session together, but also here what the users want. I mean, as statisticians, we have to respond to the user demands, and we have fundamentally two types of users here in the room: the researcher community, academia, and the policy community, and we need to listen carefully to both, so that we deliver the measures and the metrics that are needed. I'm not sure it's going to be a revolution, Pedro, but we are getting there, and please work with us and let's all work together. It is also important, as I said at the very beginning, that we do it all together. It is not sufficient if just one or two or three countries develop sexy measures. And that can be the beginning of a process of mutual learning, but ultimately we want to have a metric that is good for all of us and that allows us to speak this common language. So in this sense, I'm very happy to be part of it, myself, and also my office, and to learn from you today. So good luck with the conference. I'm really looking forward to it.
Thank you very much, Stefan. Thank you very much, Lucas and Pedro, for the opening remarks. Well spoken, and it gives a good scene setting context in which we now move forward to two sessions on the presentation of the distributional accounts prepared for high-income countries and for emerging economies. With that, I'll first give the floor to Matthias André, economist from INSEE, the statistical office from France, and Jean-Marc Germain. He is the advisor to the director of INSEE. The floor is yours. I don't know how you actually want to organize yourself, but let me just indicate that you have 10 minutes, and I will cue you if there are 3 minutes remaining. So the floor is yours.
Hi, everybody. Thank you for inviting me. Can you see my screen, my presentation support? And so thank you very much for organizing this and all the opening remarks. I'm statistician economist at INSEE, the French National Institute, and we are trying to measure for understanding, and this is, I think, the main goal of our conference, of our workshop today. So my presentation is a little bit long, but I will skip some slides, and I think I will the slide will be available for common discussion, for further discussion. So my presentation is taken from an expert group who work with Luca and Thomas, which was initiated by the director of INSEE, Jean-Luc Tavernier, and I'm trying to give you some learning from distributional national accounts we built from on France. Okay, so in 3 parts, main challenges, and I will go fast on this because the main things have already been said. But what are we dealing with when we talk about distributional national accounts? So the main goal is to cover all public transfer to better describe distribution. Why cover all transfer? Because, for example, indirect tax affect living standards, and all taxes have a counterpart for public spendings. So it deals with two main research questions. Basically, the statistic ones is what are the redistributive effects, what are the effects on inequality of taxes and public expenditures. And when you measure that, you can answer the following question, which is how growth is distributed by household groups, for example. And the two main conclusions of our work is that we need to redistribute all national income in two forms. One form is before transfer, which are taxes and benefits, and one form is after transfers. And making the difference, you can measure the redistribution effect and what we call the expanded redistribution. And we'll go on that more in detail after. And the main result is that there is no good understanding of redistribution without a comprehensive approach of taxes and benefits, and including a monetary valuation of public services. There is a small, okay. Just to give you some figures, and here are a national accounts series for France, and you have two scope of the redistributions. What we call the monetary redistributions, which stop at the standard of livings, and what we call the expanded redistribution, we include all the taxes and the benefits. And in France, the usual monetary approach incorporates half of the transfer. So the main conclusion is that you have to deal with all the taxes and all the transfer to correctly measure the redistribution operated by a government sector in the SNA. So here is a small graph of the results. So pardon, it's in French, which is taken from a French publication, and I will translate it so you can better understand. But the conclusion is quite simple. The conclusion is for France, the exercise we construct is that there is twice as many net winners of redistribution with the expanded approach than the usual one. These are the lines in the right hand side of the slide. The blue lines are the expanded approach. In dashed line, you have primary income, including all the primary income of all sectors, of institutional sectors. And the full line in blue, it's the after transfer national incomes, and you see that on average, the modest in households benefit. The left area is positively received by the households, and in the right side of the graph, it is negatively. These are the easiest, the richest households contribute to the redistributions. And for the pink lines, you have the dashed line and the full line, which is the monetary and the usual approach. So first conclusion, the pink lines are not equilibrated, which means that you tax more than you give benefits to households. So that's why you have a disequilibrated conclusion, and you need to include all the transfer and the benefits, and then you can measure the redistribution effect of the government sector. How we work on how we construct these main results, and it's it's taken from a long months work of experts animated by Jean-Marc Germain and from INSEE and Lucas Chancel from the Wheel. And these expert groups worked during some months with a researcher and statistician from INSEE and also from French ministry and French administrations. So the report is now in French, but it's going to be translated in English, so you can have it in next in few weeks.
Matthias, 3 minutes.
Yes, okay. So I put the main objective of the expert group which was basically comparing the different studies and propose a framework, propose a norm, as Stefan say, to build distributional national accounts. So I'm going to be fast on this, and I put it on the slide so you can look at it afterwards. And the main conclusion, as I said, is that you need to focus on the whole distribution to compute the redistribution impact. And one key thing to compare studies is to take into account how you classify households and individuals, which is the main findings of our reports. And we recommend the use of disposable income to rank the households to measure redistribution. So how you construct this distribution national accounts? It's quite a simple framework. Basically, you start from the left integrated economic account to arrive to build the redistributive integrated economic account, which is in the right. And basically, you attribute the firms and the government sector to the households, and then each household, you use microdata to distribute each transfer, taxes, benefits, social contribution, benefits in kind, benefits in cash. And you can now compare the national net income before transfer and national after transfer. So some basic results, and I have a lot of more slides that I can discuss, but I just to have some image of what we can measure. Here are the decompositions of the net national income before transfer. And the net national income after transfer. These are the same dashed line and the same plain line that I already commented. And to see that the in red, yellow, you have the benefits who are received by the household, and in blue the taxes which are paid by the households. So this decomposition is really rich to analyze, and here are two examples. You have the by decile of standard of living, the profile of transfer of allowances and pension, and you see that in France, excluded retirement pensions, transfer and social benefits are very targeted at the most modest, and the main conclusion is that the social, the in-kind transfer are the main way that how redistribution works in France. Here it's in France, but as a half of the redistribution is made by health, education, and so on. So here is another graph of taxes, and you see that in France, the taxes are slightly anti-redistributive, and it's due to tax on consumption and on products. So as a conclusion, if it's working, no, it's not working, my screen, sorry. Here is a link of a French...
Matthias, you have to come to a conclusion.
Yeah, it's my final slide, so it's a conclusion. So the main conclusion is that with this expert group, we succeed in constructing a framework of making national distributive national accounts, which is now officially developed at INSEE, and we will publish further in publication. For example, we are ongoing work on other category and not by decile, for example, by age group, family type, rural versus urban. And what we claim is not so complicated framework, and you need some micro data. But thanks to the integrated framework of the SNA, it's now easy to compute these distributional national accounts. And I think it's done for me. Thank you for your attention. And if you have some question, you can write me an email or ask me afterwards. Thank you very much.
Matthias, thank you. It was a great presentation about the work that you've done at INSEE. And sorry coming in there, but we need to follow very strict timings, otherwise we will run out of time for others. So, but thank you. It was a great overview of what the work you have done at INSEE. I'd like to move on, if you don't mind, Matthias and Jean-Marc, to Thomas Blanchet. He is the coordinator of statistics for the World Inequality Lab. Thomas, you have 10 minutes and I will cue you again if 3 minutes is remaining. Thomas, the floor is yours.
Thank you. So thank you very much. So thank you, Matthias, for for presenting this report, to which the wheel also contributed, as you said. And so what I'm going to do in my presentation is basically talk about how at the World Equity Lab we've been extending work similar to that was done for this report to many countries. And so in my presentation, I'm going to focus on high-income countries. And the next presentation will focus more on emerging and lower-income countries. Now, obviously, there's, in general, on average, the data availability situation is better in high-income countries. But the reality also is that the situation varies a lot. And that we've realized, over the past few years of working on distributional national account at the WID, is that there are many of the tools that we developed for higher income country turn out to be very useful and can be also used and extended to lower income countries. And so in practice, even though we have these two presentations on high income and lower income, the reality is that it's really a difference of degree more than a difference of nature. So let me start by saying a few words about kind of the key documents here at the wheel that basically on which all the DINA project rests, which is the Distributional National Account Guideline. So basically we've been doing DINA for more than 5 years at the wheel, and we've learned a lot from all this practice, both in academic context, but in context of collaboration with institutional collaborations, so including this INSEE report, including participation to other expert groups. And so last September, we released the first major revision of the DINA guideline. So it's like the first version was published in 2016, and this was major revision that incorporates basically 5 years of lessons from applying DINA to a wide variety of countries, of situation. And so basically, we really try to address all the differences in terms of institutional settings, in terms of data availability, and so on. And so it's a document that is available freely online for everyone to download and read. And so if you're interested in this project, we very much invite you to do so. So let me start with basically what is, was the starting point of the DINA project, which is that, the standard sources that we use to measure inequality basically have a tendency to miss a lot of what we call income as defined by the national accounts. And that is something that can make temporal or international comparison problematic. In particular, so what the standard sources on inequality do is that they really focus on income that are distributed to individuals in the most obvious of ways, which in general is very true for labor income. And so they tend to capture more or less quite well labor income, but on the other hand, capital income, well, there's a lot of it that is missing from the statistics. And so here you have what the picture kind of looks like in Europe, when the recent year we're basically missing in standard inequality statistics, half of the capital income as measured by the system's national accounts. In the US, it would be more like 2/3 of capital income, so even more. And well, first of all, it kind of creates this disconnect between, all the discussion about the labor and the capital share, the discussion that we have, macroeconomists have, also in policy circles, discussing about macroeconomic numbers, and which is somehow disconnected from the discussion on inequality. Even though, when we talk about the labor and the capital share, the reason why we care about this question is because we all understand that there is a distributional issue, underlying this, with capital income being usually much more unequally distributed. And so I want to stress here that it's on some level, they kind of can be viewed as a theoretical issue. And I don't want to completely dismiss the intellectual satisfaction of having a framework in which, the macroeconomy is basically the sum of, microeconomic agents. But it's also an issue that manifests itself in a very concrete way. Not having this comprehensive view of income means that sometimes you're going to have changes in the tax legislation that are going to move, income between the household and the corporate sector for purely spurious reason with no real economic significance. And when you do that, you suddenly have breaks in the series that make it look like there's more income or more inequality, or inversely less inequality, even though in practice there's no real change, no real economic change behind that. And so it's also especially true when it comes to capital income for the top of the distribution, where you have a lot of people, especially the wealthiest, who often have very little, standard taxable capital income that would be recorded in either tax data or survey, creating this odd situation where basically you have people whose wealth has been increasing year after year for decades, despite the fact that in official statistics, they seem to have very little income. And that creates this kind of disconnect that makes it very hard to tell consistent stories. And so ultimately, we need to define really a set of consistent guidelines for what is income, and that's really where the SNA shines. That's why we should follow it. So, when we extended basically this, this work to many regions, so we basically can find a lot of interesting results, and basically we've been able to produce this series on inequalities that are really comparable across regions. So here you see the contrast between Europe and the United States, where we see this, basically an increase in inequality on both sides of the Atlantic, but with a much higher increase in Europe than in the US. And once you combine basically this distributional data with the macro data, you can get into very interesting analysis, because we kind of all know that the US has grown much faster than Europe in terms of aggregate growth since the 1980s. But when you combine that with the different trajectories in terms of inequality, what you actually realize is that the bottom 50% in the US has actually experienced very little growth over the past, since 1980. Basically no growth in terms of pre-tax income, a little bit in terms of post-tax income, whereas the situation of Europe, it's still true that top incomes have grown faster, but there's still been some growth at the bottom. And so when you plot basically this growth rate alongside the distribution, you get this kind of graph, which has the growth incidence curves for pre-tax income. And what's really striking here is that, so we see again this faster increase in inequality in the US, but we also see that most of the action has really been happening within the top 1% of the distribution, which tells us why it is very important to focus and include this part of the distribution in our statistics. Otherwise, we're going to miss basically most of the story. So again, having this macro consistency in terms of distributional statistics, it kind of allows us to combine questions about the convergence between country and inequality and global inequality. And what we see is a decomposition of inequality in Europe and the United States between kind of between state component in the US and between countries component in Europe. And we see basically that in both cases, basically the lion's share of inequality is driven by within country inequality. So it's not really enough to look at differences in aggregate income between countries. So then, as Matthias basically pointed out, having this comprehensive measure of income allows to basically get a comprehensive measure of redistribution by looking at how the income changes on a pre-tax and post-tax basis in different cases. And so we actually get this view, which is not actually completely obvious, that actually the US do redistribute a fair amount of income. And in particular, the lower incidence of sales taxes in the US that kind of affects progressivity of the system. And basically, in the end, the higher inequality in the US is mostly explained by pre-tax inequality than post-tax inequality.
Thomas?
So basically, then we
have to bring this to a close.
Yeah, I'm almost done.
Thank you.
So I'm just going to skip very quickly here, where basically we do this decomposition for basically every country for which we have data, both in terms of tax and transfers, which is similar to what Matthias has shown, basically, for the case of France. And so let me just conclude that all the data and the code that we use to produce this distribution national account, they're open, published online. We are already, in a process of yearly updating this data, kind of production, like operational production capacity. Is data that has been used, by other, not only academics, but also other institutional actors. For example, this report from the European Commission, where one chapter uses our data to look basically at the evolution of growth in Europe. And let me finally say that we're also working very hard to extend this framework to study other dimensions in inequality. For example, gender inequality, where this work was already done for France and the US, and we're currently in the process of really extending it at a global level and produce some global data on gender inequality.
Thank you, Thomas. This was really great to see, and also to see the the different sort of results now, also comparing other high-income countries. Really striking sort of results that you presented. Thank you for that, and I'm sure that people will come back to you on that. I see that there are questions being raised in the chat. Maybe I will give the floor to the presenters later to address these issues. So if you would check some of the questions that have been raised, that will be welcome to prepare yourself. I will now move to the next sort of session on distribution national account in emerging countries. And I would like to give the floor to Marc Morgan, Regional Coordinator, World Inequality Lab. Marc, the floor is yours for 10 minutes. And again, I will cue you if 3 minutes are remaining. Marc?
Okay, thank you very much, Ivo, and everyone. I'll just share my screen. Now, so following on from what Thomas presented on high-income countries, Roida and myself are going to present some of the World Inequality Lab's results on distribution of national accounts in emerging countries. And I'm going to begin with Latin America, and Roida will continue with other emerging regions. And so just to give you a bit of background, so this, these results in this project really comes from a partnership between the World Inequality Lab and the United Nations Economic Commission for Latin America, where a partnership where we've agreed to interchange data, so microdata, survey microdata harmonized by ECLAC and our results. And it's already begun to get the backing of numerous, not only ECLAC, but some country governments that are interested in going into even more detail with their own data sources. And it's got some high-level political backing as well in some countries. And already the preliminary results of our work are being published in ECLAC's Panorama Social, first edition last year, and subsequent editions in the coming years. So what I'm going to show you are going to be based on 2 working papers that we're writing with colleagues at the lab, where we take data for 10 countries, among them the largest, covering over 80% of the population and 80% of regional GDP. And what I'm going to do in this presentation, I'm going to present 8 points about the reconciliation of micro and macro data in order to measure macro-consistent distributional estimates. So point 1 is that in the region, surveys, household surveys capture around only half of national income in the region. So I'm giving you the example of Brazil, where gross national income can be decomposed between the household sector in blue, the corporate sector in red, and the government sector in yellow. And you can see that the aggregate income in the survey only captures about half of total national income, and a bit more of the household sector aggregate, but there's still a significant gap. And fiscal data only covers, about 40% of national income, even though it accounts for less than 15% of the population. So we already can see the deficiencies of survey data here. In other cases, these gaps can even be larger. Here I'm showing Chile and Mexico, where in Chile, the survey captures about 40% of national income. And Mexico is the most extreme case, where it's down to almost 20% and trending downwards worryingly over time. And fiscal data as well in both countries also covering similar or a bit less. The second point is that survey underestimation is a big part of the gap.
So if we can decompose this missing half into what we can call a measurement gap and a conceptual gap, the measurement gap is basically the share of the gap that's due to survey underestimation. So incomes that the survey measures, so includes but underestimates, as opposed to the conceptual gap, which are income items that the survey by definition does not cover, because they are outside of the household sector, or for example, they are imputed property incomes that the survey would never capture. So at least, over in the case of Brazil, again, over half of the gap is due to this measurement gap, so the survey underestimation. And if we decompose this red part of the gap into different income items, the point is that most of the measurement gap is due to capital income. Again, I'm just showing Brazil, but the same results apply to other countries. So capital income, capital income gap explains a big part, simply because 90% of capital incomes in the household sector are missing in surveys. And we know that capital income are the most unequally distributed item in the microdata. So this is going to have an incidence when we try and close this gap. Fourth, if we adjust the survey with tax data, so if we correct the top incomes of the survey with tax data, coverage improves, but still there are remaining gaps. And here showing Brazil and Mexico. So indeed, the aggregate income gets closer to the national income of the household sector and the total economy, but there are still important gaps. So the point here is that tax data is of course helpful, but it's not the panacea. Simply because typically there's less than 50% of the total population that's in tax statistics. Point 5 is that it's important to go beyond the household sector. So while it's important to cover the household sector items well, it's important to go beyond the household sector. Thomas already made reference to this. And here I'm showing graphs of undistributed corporate profits in the countries of the region. And the point here is that they vary a lot. So between 5 and 10% of national income and 10 and 20% of survey total income. And they vary a lot over time and between countries. And so it's important to take these into account if we are to accurately compare distributional results across countries. So when we try and combine and reconcile and close the gaps between the micro level data and the macro level data, here I'm showing the top 10% income shares in Brazil. When we go from the series and we correct the raw survey with tax data for top incomes, and we get the red series, and we already see a change in levels, but also interesting, a change in trends. And then once we've corrected the survey with tax data, we try and close the micro-macro gaps. So we scale all income items in the micro data to match the macro level aggregates for the household sector. This is the yellow series. So again, changing trends as well as levels. And finally, the pink series is a result of imputing corporate retained earnings to the distribution. So our method is flexible enough in the sense that we can see the impact that each step of the procedure has on the resulting inequality indicator. This is the case for Brazil at top 10%. This is the case for Chile and Mexico. Again, we see not only changes in levels, but also trend, which is significant. The same, I could show you the Gini and you'd get the same picture. So, as a result, when we get to the distribution of national income of the total economy, we can more accurately compare levels across countries. These are the 6 largest economic countries in the region. And we can see different shapes to the distribution between 3 broad income groups. And this is the final point, probably most importantly, is that we can get a more accurate distribution of growth. So this is the growth incidence curve in Brazil, in the years of its high growth in the 2000s, where for each percentile, we show the total income growth between these years. And the point here is that it's very hard to understand the recent political dynamics in Brazil without recourse to a graph like this. And just looking at the survey will miss a large part of the story of what went on. So this is why it's crucial to account for all income that appears in the national accounts, notwithstanding the challenge of trying to close these large gaps that we see in the emerging world. So now I'm going to hand you over to Ruwaida, who's going to talk about other emerging countries. Thank you.
Thank you, Mark. Great presentation. Ruwaida, the floor is yours. She's the Middle East coordinator from the World Inequality Lab. Sorry for the echo.
So following on Mark's presentation, I'm going to present the other cases of other emerging countries. So in emerging countries, inequality estimates generally are measured using survey data, which is self-reported. So they are missing an important share of incomes that accrues to the top of the distribution. And if we look at the proportion of national incomes that is covered by survey data, we find that survey captures less than half of national income. And when we try to correct it with tax data, we find that important share of national income is still missing. And if we look at different countries and regions, for example, India, we find that still 55% of national income is missing. And for Middle East, 39%, Brazil, 27%, and South Africa, 24%. So if we want to use the same principle and methods, such as the one used in Europe and Latin America, like presented by Thomas and Mark, we find that for South Africa, if we only rely on survey data to estimate inequality levels, we'd be underestimating it by a wide margin. But when we try to top correct it with tax data, we see and notice an important upward shift of inequality levels. And when we try to impute the missing national income subcomponents, such as imputed rents, other property incomes, and undistributed profits, we notice even more upward shift in inequality levels. And because South Africa has detailed national accounts, we are able to do this kind of distribution, especially for missing national income subcomponents that are not covered by survey or tax data, and normally they are excluded from the household sector. So if we want to take another example of another African country where we don't have such detailed national accounts, our methodology is still adaptive and can be applied. And we apply this, combine the survey data with tax data and correct and upgrade it to match average national income. And we notice the same upward shift in inequality levels, for example, here. So before talking about global estimate, we need to emphasize the importance of decomposing the distribution into finer groups. Because, for example, if we take the example of wealth distribution in South Africa, and we only focus at the top quintile, we see that we are stopping at the aggregate level, where the top 20% capture almost 100% of the total household wealth in South Africa. But if we decompose it even into finer groups, for example, top 1%, we would see that inequality is even more concentrated within the top 20%. And even if we decompose the top 1% into finer groups, we'd find that it's even more concentrated within the top 0.01%. So moving forward with global estimate, because we were being at the World Inequality Lab developing a harmonized methodology to impute and estimate distribution national accounts across the world, we are now being able to measure inequality estimate at the regional level and compare which region has been more unequal depending on how much income accrues to the top 10%. And in this case, we see that Middle East and North Africa is the most unequal country in the world because 57% of the national income accrues to the top 10%, followed by Latin America, Sub-Saharan Africa, and of course, the least unequal country in the world is Europe, where top 10% only controls 37% of national income. But as we are being able to measure inequality between regions, it's also important to emphasize to see inequality levels within regions, because it doesn't mean that the Middle East has been the most unequal region in the world, that every country in the Middle East is unequal. So it's not also about if you have a specific development level that you have a specific level of inequality. Within the same region, we can have same development level, different level of inequality, which is very important for the policy debate. And moving to the last slide here is like I'm discussing the variation of data quality across the world and the availability of survey data across the world. as you can see here, that the darker the colors, that it means that the country doesn't have a good data quality data and doesn't have tax data. And it doesn't mean that it's a rich country that it has a good data. We have troubles accessing survey and administrative data in rich countries, and normally they are not linked. And also for emerging countries, the problem is we don't have access to tax data, and national accounts are not as detailed as we want them to impute the missing national income. And also to emphasize the importance, because we have GDP estimate for those countries, we still apply our methodology to estimate distribution in national accounts. And to conclude, I'm gonna say that in order to improve inequality data, we need to improve the whole public data system. And thank you.
Excellent, very insightful information. Thank you for sharing that with us. It's a huge research that really can contribute, as you said, to the policy debate about inequality. Thank you for that, Ruwaida. With these presentations on the high-income countries and the emerging economies, I would like to move to the next segment, and presenters, please keep your videos on. It's nicer to look at, nice faces rather than black screens. So keep it on if you like. I would like to move to the discussants of your presentations. We have 3 discussants in order. It will be Aruna Sugana, Director from Statistics Mali. We have Jorrit Wijnenberg from the OECD. He's doing quite a bit of research for the national accounts community in this particular area. So I'm pleased that Jorrit is there to represent the statistical community. And also, and Mansour Ndiaye, head of the inclusive growth from UNDP. With that, Aruna, the floor is yours. 5 minutes, please.
Okay. Thank you so much, Ivo. I will speak on behalf of Aruna Sugani, the Director General of National Statistical Institute for Mali. Okay.
Welcome.
So, yeah, thank you so much. Yeah. So I will give my comments on the 3 presentations, okay? The first one, which was provided by INSEE, entitled Inequality and Redistribution, Learning from Distribution National Accounts by Mathias André and Jean-Marc Germain. This presentation highlights the importance of enlarged redistribution approach compared to the traditional method, which is monetary based, okay? For this purpose, they consider a monetary valuation of public services, okay, like education, okay? For France, for example, they concluded that there are twice more net winners of redistribution with enlarged approach compared to the traditional one. That's an important point to be underlined. Okay, and as a methodology of their working, so they put in place an expert group, okay, which deals with the issue of enlarged approach. Okay, the objectives of this expert group ranges from examining the discrepancies between sources, scope, and concept of inequality, and to ensuring a recommendation, okay, with a view to establishing a recurrent distributional account, okay, accounting publication. Okay, this is the comments regarding the first presentation, okay. So the second one, which was made by Thomas Blanchet, okay, which is entitled National Distribution National Accounts in High Income Countries, okay? Lesson from Europe and the United States, okay? This presentation, the main conclusions of this presentation are that standard sources miss a large share of capital incomes, okay? This was a point which was highlighted by the presentation, okay? And it is also important to harmonize guidelines, okay, so that the studies can yield comparable results on inequality across regions. Okay, and to understand inequality dynamics. Okay, so it is very important for that purpose to look at the top 1% of income share. Okay, okay, that is our comments regarding the second presentation. Okay, okay, let's move to the third one. Okay, for the distribution of national accounts in emerging countries. Okay, this presentation made by Mark Morgan and Raida Moshrif about 10 countries in Latin America, okay, highlight some important issues. Okay, so for example, agreement between organizations. Okay, this is a very important point. Okay, interchange of data and results. That's also very important. Okay, cooperation between governments and between government ministries. Okay, that is also very important so that things can be made easier. Okay, and we will say that without such agreements and cooperations, data availability could be a kind of a hindrance, okay, for researchers. Okay, that's very important. Okay, so the presentation shows huge differences, okay, in percentage of income sources in the national income. Okay, the question is how to put an integrated system of inequality analysis. Okay, that's the question. So by combining survey sources and national accounts, we could analyze, for example, gender-based, okay? We could conduct gender-based analysis, okay? And other relevant topics, yeah, by combining the different sources. So that's why we are talking about a kind of integrated system for inequality analysis. Okay. Okay. The researchers were also interested in the bottom 50 share, okay, and top 10 for the income, okay, for the survey income, okay, and national income over time. Okay. They concluded that income shares change in level and in trends. Okay, that were the main conclusion of these researchers. Okay, they also dealt with income inequality for some other countries. Okay, by looking at, for example, top 10 income shares in South Africa and Ivory Coast, they showed us that there is a large variation in inequality across series. Okay, that was a point that came out from their presentation. Okay, so they also express the necessity of breaking down the distribution beyond quintiles. Okay, yeah, that was also a fact that has to be highlighted. Okay, so I will conclude by talking about one issue, okay, regarding the partnership between Mali and AFD, Agence Française de Développement. Okay, so they sent us terms of references, okay, between a partnership regarding the conduct of studies for inequality issues in Mali. So the National Statistical Institute of Mali, INSTAT, does express its interest for this project. Okay, it's very important for us. Okay, so in terms of inequality analysis, what the INSTAT has been doing so far is just analysis based on households' expenditures, okay, not on the salary. So the project of IFD aims to have information about salaries, okay? So this can be made easier by this collaboration, okay? Okay, so to achieve these goals, okay, for that project, we really need technical support and financial support from the different partners, okay? So that we can collaborate together and gather data about inequality issues. Thank you so much.
Thank you very much for that detailed review and your observations. And thank you for stepping up and in this kind of work and ask for support to develop these accounts, inequality accounts for Mali. Thank you. With that, I would like to turn to Jorrit Zwijnenberg of the OECD. Jorrit, the floor is yours. 5 minutes.
Thank you very much, Ivo, and thank you very much to the presenters for very interesting presentations. So just to provide a bit of background on the work that we are doing at the OECD. So we are also involved in the compilation of distributional results with an expert group. Slightly different concepts used than the ones in DINA and also slightly different methodology, but indeed a lot of similarities in the approaches. So I thought it would be very useful to see indeed where we can collaborate. Also mentioning that we recently started publishing results from our expert group. So at the end of December, we started including results for 33 countries in our databases. So I would like to encourage everyone to have a look. And we also recently published a working paper on the results. So looking at the presentations, I have three main topics that come across for me. And the first one is that they clearly show the relevance of all of this work. There is a huge policy demand for this information, and the results clearly show examples of how these results might be used. And it also shows indeed the relevance of aligning the results to the national accounts totals, as it leads to more comprehensive, consistent, and coherent data. So elements that might be missing from the micro results might be captured if you align to the national accounts totals. It was already highlighted indeed that the current SNA doesn't really refer to any distributional information. So at the moment, the international community is updating the international standards. And as Ivo already mentioned, there is going to be a separate chapter on the compilation of distributional results, focusing amongst others on the concepts, the methodology, specific challenges in the compilation process. So I think this is a very important step forward. And we also would like to extend this information to other areas, such as unpaid household activities, just to have a look at the distribution there, education, looking at human capital, and also at environmental economic issues, just to see how it affects different groups of people. So I think this is a major step forward in this domain. Then a second topic, what I took from the presentations is that the specific scope of the work is quite relevant. So what is within the scope, what is outside the scope. So the income concept that might be used might be different. In that sense, you have the micro concept, which is more the cash equivalent. You have the national accounts concept, which is focusing on the household sector per se. And you have the extended measure to align to national income or even going to disposable income. And I think this is where we currently differ. And I think this is not a problem at all, because the measures are complementary, as was shown in the presentations. I think the only thing is that we have to be very transparent to the users on this. And just to explain, indeed, in the OECD work, in our project, we mainly focus on household income as defined in the SNA. And going to national income, from our perspective, might be stretching it a bit too much, in a sense that you are going to include some income elements that are more relating to some of the other sectors in the economy, which in the end might affect households indeed. So it's still relevant to have a look. But we have to bear in mind, indeed, undistributed profits from corporations makes a lot of sense to me to add to households. But it, for example, also includes government deficit that might be accrued in a specific year. So how are you going to allocate that to a specific household? Any gaps between pension benefits and pension contributions, it's very difficult to allocate that to a specific household in the specific year. These might be issues that are more occurring over time. And then also the impact of the collective consumption. So we do indeed include the social transfers in kind. So education, healthcare, those are relatively easy to allocate to specific households. But the collective consumption, so relating to justice, defense, police, public roads, it's very challenging to allocate to individual households, and we are not sure indeed if that would be of benefit to the analysis. But as I said, this will really depend on the specific policy use of these results. So I think it's still relevant to have a look into this, and this is also something we want to do in our expert group. So we are developing this centralized approach in which we can also compile results for missing countries. And here we want to focus on the income concepts as defined in our expert group, but also go one step further to broaden the measures to the national income concept as used in the World Inequality Lab and is also suggested by INSEE. So I think this would really benefit users to see how the inequality changes going from one concept to the other. Then finally, I think an important issue that was raised in the presentations is the methodology. So it's clear that we have to overcome several challenges in compiling these results. We start from micro data sources, so surveys, admin data. We try to include as much information as possible and then try to align to the national accounts totals. But not for all items, there will be a corresponding micro data source. And for some items, you are indeed faced with large macro gaps. So you have to find a way, you have to apply assumptions to bridge these gaps. And I think this is one of the main reasons why in our work for the moment, we only go up until the quintile level, because we feel that the margin of error surrounding the results is still quite large, and we need more information on the reasons for these gaps. And this is something that we are currently working on and that we would like to further extend, having better information on the reasons for these gaps. If you look at capital income, it might be more related to the higher income groups. But if you look at some other items, such as mixed income, there might be a large informal economy in specific countries. So you really have to know how to allocate these amounts, because they may really influence the final results. I think for this, it's very important indeed to collaborate with all the groups working on these results, because I think we're all in the same boat. We're all facing the same problems. And I think where we indeed would like to improve our results to be able to publish more granular results, going to the decile level, maybe going to the highest top 1 percentile, maybe also focusing on some other socio-demographic groups for which there is a lot of interest. And I think we can benefit a lot from exchanging best practices. So in that sense, for the SNA update, I think all of the work presented here is very instrumental for the upcoming SNA revision. And I think for us, the main goals are to improve the quality, to improve the granularity, the timeliness, which is also very important in relation to the COVID, and also the frequency of the results. So not only publishing annual results, but maybe also going to quarterly results to have very quick results on that. I think we are very happy with this ongoing work, and we look forward to continued excellent collaboration. Thank you very much.
Thank you, Jorrit, for these elaborate and very detailed comments and well taken. Thank you for that. With that, I'd like to turn to Mansour Ndayaf. He's head of inclusive growth from UNDP. Mansour, the floor is yours for 5 minutes.
Thanks so much, Ivo. I hope you can see my screen. It's normally sharing. Let me put it in slide mode. So first, let me start by commending the World Inequality Lab and the different institutions that are collaborating with them in this bold initiative, which I believe is a timely one, and for several reasons. First is that, as you know, inequalities are at the heart of the SDG agenda. And more specifically, when we look at the goal 10.1, which looks at how to progressively achieve and sustain income growth, the bottom 40% of the population. making sure that their income growth is higher than the national average. So I think that's one of the defining questions. Truly understand actually who benefits from economic growth. What we're seeing right now, of course, is that we are in the middle of the COVID recovery. So we want to make sure that we have a thorough understanding of who benefits and who loses. And especially the thing is to take into account is that for the first time since 1990, global human development is going backwards. Poverty is going backwards. And this overall pandemic is impacting not only the poorest and most vulnerable, but also the most fragile and conflict-affected countries that are being really hit hardest. Now, one thing that came out clearly from our 2019 UN Development Report is that we need to go beyond averages and really beyond summary measures. The challenge here is how can we get a more precise picture of inequality? And I think that's really what the value added of this gender approach is, because it allows us, of course, to describe distribution of income and wealth with as much detail as possible, not only looking at the bottom, but also at the top to get really a thorough picture. Of course, the improved comparability is a strong value added here. And definitely what we want is this harmonized approach, which is critical. But then again, this is at the heart of the inclusive growth agenda, which is basically how do you reconcile inequality measurement and national accounting? Who benefits from growth? Who gets more income? Who gets more jobs? And here, what I would like to do is to comment on the different presentation that we've had, and really would like to congratulate colleagues with the presentation from the different regions, and refocus it a little bit more on developing countries that have not been touched so much, but still those issues that have been pointed out are still relevant. First is one example. When you look at a summary measure like the Gini, what we hear is that the Africa is the most unequal region in the world, followed by Latin America and by the Middle East, and that's what we would see in the bottom right part of this slide. But then when you look at it from the national distributed income perspective, you get a slightly different picture of what's really going on. And here what we're seeing is it's rather Middle East, then followed by LAC, and then Africa. In the end, what matters is not so much that the picture is changing, but really it's what lies behind. What are the learnings that we can take from there, both across countries, but also within countries. And I think there's a lot that the DINA approach brings in here. Now, of course, there are lots of opportunities in using this approach, but at the same time, it raises a number of challenges. First, data series are fragile and may require significant revision. You've mentioned a number of challenges, for instance, the macro-micro consistency. Well, it's even more acute when you're discussing developing economies because you have large gaps. First, the availability of household survey, while it has increased, still suffers from undercoverage. Second, tax data, when they are available, miss a large share of capital incomes. And the challenge is even worse because in a number of countries, they don't still even publish any tax statistics. So I think that's really a challenge here. More challenges, large informal economies, weak tax administration systems, surveys that are more focused on consumption rather than income, a number of GDP revision, and so on and so forth. So all of this brings us to the question of it, which is basically, and that's what the previous presenter was saying, we're on the same boat. But now, how do we make sure that we don't have a two-track approach where a number of countries are being left behind, are being data poor? So I think that's really one of the questions that I would have for our colleagues. How do we go about that? Another challenge that I've seen also is the fact that the bottom distribution that you're looking at is 50%. So it kind of raised my curiosity as to why not use the globally agreed bottom 40% that we use as part of the SDGs and SDG 10.1, for instance. Lastly, what does it mean in terms of how can we collectively address these challenges, notably for developing countries? Definitely investing in statistical capacity and transparency. That's really an issue where more efforts need to be done to improve transparency, better access to data, and that would be really critical if you were to bring about more accurate conclusion about inequality levels. Quality of data, definitely one of the key challenge here, because the idea here is, of course, to distribute the whole of the GDP growth, that comes from the national statistics, and that's a challenge in the sense that we've clearly seen from a number of countries, and especially in emerging countries, that to reach 100% of the income, the GDP growth, you really need to use corrective measures. So how robust are those corrective measures? Of course, it's better than nothing, but it means that there is still a way to go, a long way to go in terms of fixing those imperfections. Now, last challenge here is that data comes at a cost. So here it raises the issue of how do we support countries that do not have that kind of fiscal space to also make sure that they have the means to invest in data. So here it's definitely progressive taxation systems, more domestic resource mobilization, but also international solidarity. Because this is the only way that by getting the measurement right, like Pedro was saying earlier, to get into this data revolution movement and metrics, that we can also help countries have a thorough way of measuring inequalities, but also to make sure that they have the available resources to invest in various services that can reduce inequality, being social protection, education, healthcare, and so on and so forth. In concluding, I would really like once again to congratulate the Will. As of now, almost 173 countries benefit from these measurements. So I guess it will just take a last mile effort to make sure that everyone is on board. Thanks so much. Over to you.
So thank you for this elaborate response. Very insightful. Thank you very much, based on your own research. This concludes the round for the discussants to discuss the presentations, and we now have an opportunity to open the floor for the other participants to reflect on the presentation, but also the remarks of the discussants, which I thought was also very insightful, giving further sort of detail to the work of the presenters. With that, I would like to open the floor. I do found in the chat box an observation by Xavier Mancero. Maybe Xavier, are you still online? Otherwise, it's an insightful sort of question in terms of the assumptions that go into the measurement. I think other discussants already indicated the assumptions that you have to make to address the missing part of income. Xavier, are you online?
Yes, Ivo, hello, can you hear me?
Yeah, very clearly. Go ahead, Xavier. Xavier?
Well, something that in ECLAC for a long time, we did this comparison of household survey income with national accounts. And one of the things when in the presentations that we have seen is that we are using the national accounts totals as our true measure of household income, okay? But in many developing countries, the household account is not as strong. It is usually, the way it is produced is not very clear, the methodologies are not clear, and we are not sure on how good that information is and to what extent the discrepancy between the both data sources is due to a problem of underreporting in the survey, that's for sure, but also due to a mismeasurement from the capital measurement, for example, in the national accounts. So the question is, how can we go ahead to test this assumption that the benchmark of the national accounts is indeed correct, and to evaluate the quality of such benchmark? Thank you very much.
Thank you, Xavier. Good question. You're ready to respond. Others that want to put a response, please put up your hands and I try to pick you up.
Yeah, thank you, Ivo. I think this is a very important issue because I see indeed the complexity for certain countries if you still have some quality issues with your national accounts data. And what we see in the work of the expert group is that the combination of these distributional results with the national accounts totals also provides a quality check for your national accounts totals and might provide input to further improve your national accounts totals. And I think in that sense, the whole system of national accounts relies on consistency between various data sources. So the more data sources you have available, the better the quality. And I think using distributional results as one of the inputs to further improve the quality of your national accounts is very useful. So don't take the national granted, but see indeed where you see gaps. And if these gaps are related to the micro data sources, if there is specific explanation, or whether it might be in the national accounts totals. Thanks.
Yeah, no, thank you. Thank you, thank you for that response. I think the others may also want to come in, Thomas and Mark. Thomas, first you, go ahead.
Yeah, so Joit actually said some of the stuff that I was about to say. Yes, it's true that there's this issue that right now we kind of have these default things of taking the national account as a benchmark and kind of adjusting the macro data to that, but it's not necessarily true. Maybe Mark can say more detail in the case of Latin America. We should take Mexico, and is the survey data missing half of the income, or is Mexico's GDP overestimated by half? Both of which are pretty far-ranging implications in terms of how we think about these numbers. But yes, the idea that precisely, forcing ourselves to confront ourselves to this issue is really important. Basically, one of the strengths of the system of national accounts as a framework is that you have this integrated economic account where you can't just move a number and not, have it that not affect the other. It's a whole, machinery where everything depends on the rest. And basically, it kind of forces us to confront ourselves to the, statistical discrepancies that often arise. And that's basically a driving force behind the improvement of statistics. And we think that can be also an opportunity to further improve that.
Thank you, Thomas. Mark, come in.
Yeah, thank you. I think Javier's question really goes to the heart of the matter. And he really, it's really, I think, an allusion to the title of our paper for Latin America, which is more unequal or not as rich, because it's either one or the other. After all the adjustments, either countries have been growing more unequal or they're not as rich, and they haven't been growing as rich, as Tomas said. And for Latin America, with Javier and his team, we're collaborating closely on this. But I think it's crucial to get behind the macro data gaps. And as he pointed out, still national statistics offices, the methodological documents they provide that describe the production of the household sector incomes is still not detailed enough. And I think a lot more could go into making this more transparent. And with Javier and his team at CEPAL and the Latin America team at the World Inequality Lab, we were going to organize last year a workshop, but it's postponed by COVID. Hopefully we'll get around to it, which we think is very important, to gather national statisticians from the different country offices to talk about the input sources that they use for their aggregates in the national accounts, and to see what connections they have with the data sources that we typically use to measure inequality. Are they using the same sources such as surveys or administrative records for certain items? Which ones, for which years? These are crucial questions that I think workshops like the one we want to organize for Latin America could be done for other regions to try and get, around and to the bottom of this issue, which is very, very important.
Oh, thank you very much, Mark. I do not see, colleagues, more questions, but I have one, and I like to pose to any of the discussant or presenters. Is there is, of course, a high policy relevance for this work, and Jorit said that very clearly. And that is because inequality is at the heart of an inclusive societal development, where we want everybody to benefit, leaving nobody behind. That is a very important issue. But at the same time, there is a conundrum. At national accounts, we develop statistics that is consistent and available to all. But at the same time, we do not want to put a too strong emphasis on granularity for the reasons also politically we don't want to present so much detail as an international sort of recommendation, because it might run into political sort of discussions that we would like to avoid, so that the national account stays as it is. It provides the consistency frame. And then, of course, there is a need to do further analysis, right? But that has to take place. For instance, taking a whole national income concept versus a more sort of household income concept. So, and that analysis should be encouraged and should be funded, and heavily funded, because that is important. So could you speak to that point? Should the national accounts, in its recommendation, as Jorrit has indicated, take a position of where we want international consistency, provide the framework, and then leave it to others, that might be the tax authorities, finance, it might be UNDP, it might be will to do further analysis. Does that make sense? So how far do you want the national accounts to go in presenting granularity in the distribution accounts? That is my question. Anybody? It's probably too political. Jorrit, could I, yeah.
Yeah, I can have a go. So we had discussions indeed, what kind of distributional results, what kind of concepts we want to use in the national accounts. And I think for us, it's probably important to stay as close as possible to the SNA guidelines, so focusing on the household sector. But I think we are very keen to collaborate indeed with other institutes that are working on elaborating on these concepts to see if we can provide users with several concepts, and I think more importantly to come up with a good narrative of the differences between the various concepts. And maybe the national accounts community is only going so far, but I think collaborating to properly communicate and maybe see if we can take on board some of these additional concepts, maybe also encourage statistical offices to maybe go a step further. And I think for that purpose, to have a further discussion indeed on some of these alternative concepts might be very useful. So in that sense, for example, the INSEE presentation highlighted indeed, if you want to make to have more insight in redistribution, you also have to have a look at taxes on products and production. This is currently not explicitly included in the EGDNA work, but on the basis of the discussions we already had in the past, we have now included this as a separate item in our collection template to have the opportunity to also include this as additional information. So to show to users, if you also include this, you have better insight in the impact of redistribution. So I think, yeah, going along those lines, I think is the best way forward.
Excellent, thank you, very thoughtful. Thomas, floor is yours.
Yeah, so I would say I would have that. I think that's kind of position of the wheel too, that it would be desirable for statistical institute to provide, pretty great level of granularity, if only because the reality is that the statistical institutes are really the one who have both like the resources and also the ability to access the data that really let them, provide, the best estimate, timely update, which are revised consistently. Well, like we're very happy at the wheel with the work we've done and how we advance, but it's not always easy for a small institution like us to basically do all the work, revise all the number as frequently as we would. And so that's why basically, having, a statistical institute with really, people who are invested in the production of data and in the improvement, discussing, with sufficient like resources, both in terms of human resources of data, is really, really a good thing for this production of statistics, which is, a huge amount of work.
Yeah, no, thank you, Thomas, for that. I see there are more questions coming in. Can I give the floor to Ignacio Flores, please? Ignacio, are you still online?
Yes, I am. Thank you very much.
Go ahead.
I was writing my question on the chat. So yes, I am the coordinator for Latin America, and I understand at the World Inequality Lab, and I see that we are discussing about countries that have
big gaps, right, across data sets, income data sets. And that is the case of my region. I've seen that a lot firsthand. And as Mark Morgan was saying earlier, it is mainly capital income that is affected, right? And probably inequalities is more underestimated than in other regions. So my comment is that I've heard some people saying that these big gaps are probably too risky to adjust and would probably add some more noise to the data. But I actually think the incentive should be the other way around. That it is by seeking the consistency across the data sets that we can actually improve the quality of the data on income inequality in the region. So that's basically my comment. And I think there is a very big demand for this kind of adjustments in the developing world today.
Thank you. Thank you, Ignacio, for raising this issue. I want to turn to Lucas. Lucas indicated he wanted to take the floor. Lucas? Luca?
Thank you, Ivo. Perhaps just one point on the granularity issue and challenge for statistical offices. I would just like to come back to one graph that was presented by Rowaida Moshrif, where we see that, you know, the quintile approach, which has been favored by a lot of statistical agencies so far when they want to decompose aggregates into sub-components, into income or wealth levels of different groups of the population, really has its limits. You know, when the top 20% of the population capture 100% of total wealth, it's just better to publish the aggregates. So I think we're not asking for public statistical institutions to, you know, to publish detailed information about billionaires. But between billionaires and, you know, the top quintiles, I'm sure that a lot of progress can be made. And I think it's important, if we really want to be relevant in a world where there's policy demand, when there's public demand, business demand for these indicators, that we don't stop at, you know, the top 20 or the top 10%, but that we go to the top 1% and we actually also decompose the top 1% into further groups. And I think, you know, perhaps Matthias Sandre can say a few words about that, you know, on statistical commission secrecies. These were debates that were involved in the INSEE working group on where do we stop. And in fact, well, the conclusion was that the top 1 or the top 0.1% are still groups that are good enough in terms of statistical secrecy. So I would really advocate for really not stopping to the top 10% and going to really further, more granular level to answer public demand for these indicators.
No, thank you for bringing that in. This is an important discussion because it will help us also to see what the national accounts should and maybe should consider. So this is a very important debate in moving forward in writing the chapter on distribution accounts in the SNA. So thank you for that, Luca. I see Jorrit and then Matthias, and then I will close because we have to move to the next segment. So Jorrit and Matthias, go ahead. Jorrit first.
Thank you very much, Ivo, and also thank you very much, Lucas, for your comment. Indeed, I think you are right. There is a lot of hidden distribution in the quintiles, and I think what we have done so far is going for the quintile levels, see what challenges arise from compiling these results, and I think going more granular is something that we aim for. I think definitely decile, and I think we should indeed go for the top percentile. I think the main issue is not if we would convey any confidential information on the billionaires. I think it is trying to arrive at sensible data for this top 1%. And we did some studies looking at, okay, if we would arrive at some results for the top, what part of the result would consist of actual data, and what part of the result would consist of assumptions that we brought in, and how confident are we about those assumptions. And if we publish official statistics and we are having some difficulties in explaining the results and do not feel confident about the quality, we usually shy away from that. And I think that's not to say that we shouldn't aim for this level of detail, but I think it's mainly encouraging us and the community to find a way to come up with solutions for some of the challenges that we are currently still facing. And I think we are making progress in that domain. And I think in a couple of years' time, we should be able to have decile results, and indeed, hopefully for several countries with more quality microdata to also have the top percentile. So this is definitely something to aim for within the national accounts community. Thanks.
Thank you, Jörg, raising the issue of quality versus estimates. Matthias, kindly be brief, because I have been cued to that some others also would like to come in, and I would like to give them the floor. Thank you.
Yeah, it's really brief, and I would say thank you for all the discussion and all the presentation, and just the question of the granularity and what we do now at INSEE. So I agree that the main aspect is the robustness of the estimation of the I share. So it means that in INSEE we have some quality data. So now it's quite usual to publish studies on ventiles, like people, the population divided by 20. It means that you can have the bottom 5% and the top 5%. And when it's possible, everything is possible. Every time it's possible, we publish and work on top 1% and even top 0.1%. So, and when we look at this data and when you have the significance, the possibilities, there is no specially problem on like statistical secret, especially if you just weigh the aggregate the data and not local data. So for my point is that the main issue is to develop microdata which has large enough to have this 1%, and it means like basically giving money to statistical institutes. Thank you very much. And I think
thank you for making that pitch. Thank you. No, that's well received. I see 3 more. Andrea Brandolini from Italy, from the Bank of Italy. Are you still online, Andrea?
Good afternoon or good morning, depending on the place.
Go ahead.
A very interesting discussion, and many thanks to all speakers for the presentations. I would like just to give a couple of information that are important, because I think that the quality of the data that was stressed by many with the Inequality Transparency Index is crucial. And the first piece of information is that the European system of central banks started 20 years ago, almost 20 years ago, to collect data on household wealth in Europe. Now we are in the process of transforming that collection that was mainly research-oriented into a real statistical output. We are discussing whether there is a necessity, and so we'll make that something, an official statistics with a big change in terms of quality of data and investment. And that covers 22 countries in Europe. The second piece of information is related to the discussion. There is much movement in statistical offices. And some of you may know that in the Data Gap Initiative that was launched by G20 several years ago, there was a bit on distribution accounts. Now some progress was done, but not enough. And the Italian presidency of G20 is pushing to have a third wave of this data gap initiatives. And one item will be exactly distributional, financial, and national accounts. So there is much work, much happening in the official statistical communities in both fields. So that is just to update you on a couple of issues. Thank you.
Excellent. Thank you. No, thank you for sharing this information. Colleagues, I'm cued that we have to bring this to a close. So there's still maybe others outstanding. I see that Radoslav has shared a link with information from Eurostat on the work that they're undertaking. I think that's a very important link. So thank you for that, Radoslav, that indicates the work that is ongoing more broadly within the European Union. So that is important. I may have missed some hands or some comments, but this is not the end of the conversation. So we will have other opportunities. I can assure you we will start to think about how we take these series forward, which we now have started on this so important and crucial topic. it's difficult for me, I think, to fully and comprehensively conclude, but just let me give a few minutes to a few points before I pass on to Luca. One, I think, is that we all seem to fully agree that this is highly policy relevant to get insights in inequality. And it is also being recognized that if we want to get comprehensive, consistent measures on these matters of distribution and inequality, the system of national accounts is well placed to provide that overall framework of consistent measures of inequality on consumption, income, and wealth. And that we have to now think about further to make this policy relevant, also to be granular. And we have to then to see to what extent the data will support that level of granularity that we aspire to have. And we even talk about the top 1% and even dissecting that. We're thinking about other details that we want to think about age, we think about gender, we think about location. So there are many areas that we have to understand. What sort of assumptions do we have to make to provide high quality data over time to also understand the dynamics of inequality? So that is a very important discussion. Now, how do we start to address these issues is by sharing practices. So what we have seen is an enormous amount of work that has been taken forward by national statistical offices, with Matthias presenting the work of INSEE, but we also saw a lot of work being done by a very important institute at the Paris School of Economics, the WIL, the Wealth Income Inequality Lab. We see OECD doing a lot of work. We see Eurostat doing increasingly more work. We have to bring that together in groups to start to think about how do we actually be able to write a chapter, as Jorrit has indicated, in the system of national accounts that provide guidance on the matters of data and its quality to allow us to come up with consistent measures over time. Linking micro data is a very important aspect, and then raise it to the macro level in a way that it is transparent. And as Jorrit rightly put, that we can develop a narrative around this that is consistent and has high quality, and that we all feel very proud that we release these numbers because they're so important in our democratic system to share that. So that sharing of experiences should go forward. This was just the start of starting sharing that through this online conference, and we will find other opportunities as we, bring the institutes together in a collaborative environment, both the National Statistical Institute, the academic institutes, and the regional and international institutes, so that we have a solid debate in the next 1 or 2 years to actually be able to draft a good chapter in the system of national accounts. I'd like to thank all the presenters, all the discussants, the participants being part of that discussion. And now Lucas will tell that this was not the end of the conference. There will be something much more that comes in the next session on the policy debate. So Luca, maybe you want to say something before we just simply close for a few minutes. Luca, the floor is yours. And with that, I conclude my moderation.
Thank you, Ivo, for this outstanding moderation. And so let me just say that we now have a 10 minutes pause and we resume at 5 European time, 11 New York City time. And we have this policy session entitled Inequality Data for Building Forward Better with Akim Steiner, Thomas Piketty, Heather Boucher, Christina Duarte, and Elliot Harris. So we're really looking forward to that. This is on the same link, so stay here and we'll resume in 10 minutes. Thank you all.
You can just stay online, but close your cameras. Yeah.
Hello, this is Elliot Harris. Can anyone see and hear me?
Elliot, hi.
Hi, Ivo. Great. Great. I was just about to text you. Okay, great. Achim Steiner is also asking.
Yeah, I haven't heard Achim yet.
No. And I see somebody in the chat also saying something.
Yeah.
Okay, well.
No, well, we have to, Olivia, she's from, she's making the arrangement. I think Achim is trying to get a connection. I think Elliot is set. Can I turn to you, Olivia?
Sure.
welcome back, everybody, ladies and gentlemen. Good afternoon, good morning for those who are joining us to this second segment of the joint United Nations Development Program, United Nations Statistics Divisions, and World Inequality Lab Conference on the future of inequality statistics. This second session is entitled Inequality Data for Building Forward Better. So what we are going to be interested in this second segment, after very interesting, fascinating discussions on the methodology, well, now we are looking at the policy implications of inequality data, and how can inequality data, how can better information help us actually tackle inequality in its various forms. We've also discussed earlier today that the COVID crisis is exacerbating several forms of inequality. So how can the development of better observatories of macroeconomic growth, better observatories of the inequality in the generation of growth, inequality across income groups, wealth groups, gender groups, across countries, across regions, across localities, how can this help us to design better policies? For this discussion, I am very pleased to welcome a fascinating panel of speakers, starting with Achim Steiner. Good morning or good afternoon, Achim. Achim Steiner is administrator of the United Nations Development Program, and he will start with an introductory remark in just a few minutes. Following Achim, we will listen to Thomas Piketty, professor at the Paris School of Economics. Hello, Thomas. And then after these two interventions, we will listen to reactions, discussions, interventions by Heather Boucher, who is member of the Council of Economic Advisor to US President Joe Biden. Hello, Heather. Can you hear us?
Yes, I can. Hello. Good morning.
Hello, Heather. We're very pleased to have you on board today. And following Heather Boucher, we will listen to Cristina Duarte, who is Special Advisor for Africa at the United Nations and former Finance Minister of Cabo Verde. Cristina, it's a pleasure to have you on board as well. Following Cristina, we will listen to Elliot Harris, who is Assistant Secretary General for Economic Development and Chief Economist at the Department of Economic and Social Affairs at the United Nations. Hello, Elliot. It's also a pleasure to have you on board.
Thank you very much.
All right, so let's get straight to it. Let's start with Achim Steiner for your introductory words on this session about better inequality data and better policymaking in a post-COVID world.
Thank you, Lucas. Just a quick sound test. Can you hear me okay?
Absolutely.
Very good to be with you. Thomas, also good to see you and to join Heather and Elliot and Cristina. Thank you very much for inviting me to join in what has been a very interesting day of discussion. I dialed in a couple of times, and I think one of the things that we want to explore a little bit this afternoon is, does data actually help us to better target and design policies in order to not only reduce inequality, but perhaps first of all to recognize where inequality is actually defining the way that a recovery may play out. And I think one of the things that strikes me at the moment is that we are living again through one of these parallel universe moments where we see on the one hand the aggregated GDP growth data, the recovery narrative being a dominant narrative, partly because the world is looking for a sign of hope of being able to get out of this conundrum, out of this pandemic and all that it has brought with it. And yet, as so often, we can see very clearly that not only do we have a phenomenon of divergent recoveries, first of all, we also come back to this basic dilemma that the more you aggregate data of this nature, the more you obfuscate different realities. And at the same time, we are, and this is part of also the partnership that UNDP and the World Inequality Lab have been working on together, the more you try to disaggregate data, the more you run into the fact that data is not really available or is not available in a form that allows us perhaps to delve deeper and therefore design policies that address inequalities. So one thing is this phenomenon of the narrative that I think we have to be very conscious of, because this narrative right now is a political economy narrative. It is a psychology narrative, but it is also a narrative that is at risk of hiding a great deal of inequality and leaving many behind. And, you know, I have just attended the G20 ministers meeting, the foreign ministers, development ministers meeting here in Italy. And I will be also joining the finance ministers and central bank governors meeting. And it is very interesting to, in a sense, pursue both of these narratives, because in many ways there is little disagreement amongst the G20 community about what is happening, what needs to be done, how it could be done. But then we run very quickly into this dilemma that we're not able to do it. We are not able to muster the 70% of the global economy in ways that allows us to stand up a commensurate response. So quite clearly, I anticipate that we will continue to, first of all, see a very divergent set of recoveries, that built into those recoveries will actually be an amplification of inequality in terms of the number of people that will be disconnected from the recovery. And here we can both point to a macroeconomic global economy picture, and also to communities and groups of citizens within a country. And I think this poses enormous policy challenges at the foreign ministers level. Clearly, the implications of a world that is increasingly divided and unequal coming out of this pandemic in itself triggers a series of concerns about social cohesion, about political stability, and about growing divergence also in terms of political and policy responses. So here is a first real area, I think, where that focus of our discussion this afternoon needs to home in on, because data in itself does not change policy or politics, but data allows people to judge politics and policies. And I think in this crisis, there's a great deal of, I think, more of what we have seen even in the years following the 2008-2009 financial crisis, namely that people, citizens, do not understand the terms within which we transact these macroeconomic choices, trade-offs as they're often presented, but they do see the impacts, they do live the consequences, and they begin to judge on the streets of our countries, of our communities, how that differentiation increasingly translates into a sense of injustice, unfairness. So here is a major area of concern that I think we need to address. Then there is obviously the challenge also of how policies, or rather how the response and the ability to respond of different segments in our society now taken by wealth and income determine the ability to recover. The poorer you are, the less likely you are to recover from a crisis. The more you are not only affected in terms of that short-term shock. So the notion of the V-shaped recovery is largely the privilege of those who are wealthier and rarely the option of those who are poor. It's not only extremely expensive to be poor in a pandemic, it actually impoverishes you. And if you just take the latest data that UNDP released in its Regional Human Development Report for Latin America and the Caribbean, if you just take some of the headline poverty data, we are back to 2008 levels of the number of people in extreme poverty, which means we have lost 13 years in a period of 15 to 16 months, just as a rough estimate. Now, obviously, and I imagine Thomas and Lucas may have other data, and we can debate the numbers, but I think the trend lines are clear. We also know from experience that in crisis, economics works, demand and supply works, markets respond. The problem is that the scarcer commodities become, the scarcer the availability in the marketplaces of food and other commodities that are not just luxury goods or things that we would like to have, but that we need to survive, the more a few begin to benefit in an exponential way. And that phenomenon is not one that is limited or restricted to, high-income countries. It is one that equally replicates in low-income countries. And so we are going to experience and are already seeing a very perverse situation where out of the crisis and the stress that is imposed on our economies, many people are going to be losers and some are going to be big winners. So that same phenomenon is also amplifying itself at national level. And if you are already a least developed country, a low income country, then you can see also why in the Human Development Index and in our research we have undertaken with the University of Denver, in which we examine different scenarios for recovery, the greatest number of the poor in the years to come, and we have extended that scenario building up to 2030, would in fact correlate almost exactly with least developed countries, with the lowest income countries in the world. That is where the greatest number of additional longer-term poor out of this crisis, out of this economic setback would be found. And with that scenario, to me, very troubling, that tail of COVID-19, even assuming that maybe by 2022, we are largely through the current phase of a raging pandemic, actually means that we have 8 years, maybe 10 years of the aftershocks becoming structural in terms of an income and wealth impact. So this is very concerning. Finally, if I can point to one more interesting phenomenon, it is the digital experience that COVID-19 has presented to us. I think inequality that was foreshadowed, in fact, in a report that, Thomas, we worked very closely with you in the World Inequality Lab for 2019, which looked at inequality and came to one conclusion, amongst others, that digital would, in the coming years, although I think none of us foresaw the speed with which this would play out, digital will become one of the key variables in either reducing or amplifying inequality in our societies and economies. Well, I think the world has just brought forward by 5, maybe even 10 years, some of these trend lines that we began to see, which fundamentally need to inform policy, because digital is permeating not only every aspect of our economy. In this pandemic, it has also in a brutal way demonstrated how absolute the impact is of having or not having access, being trained, being able to afford broadband, whether it is the billion kids who couldn't go to school, whether it is the people who could not essentially be included in cash transfer schemes and so on. So again, for us in UNDP, it's not a technology fetish, but it is to understand and appreciate how a new technology that permeates almost simultaneously our global world economy and communities across the world, and will influence and shape directly their ability to participate in markets or not, to access education information, will in many ways, as a result of this pandemic, be even more of a factor on which we need to put immediate policy attention. Which brings me to my last remark. We have extraordinary choices to make over the next few months. As a global community, we have struggled in the first 12 months to stand up a rational response. We have stood up a humanly understandable response. Every one of us will be concerned, first of all, about our family members, our community, our country, and how to protect them. Nothing irrational about that. It is human, it is natural. But we need information, we need data to demonstrate that what is natural and empathetic may not be rational in terms of how we actually try to shape a recovery. The alphabet soup that is currently being used to describe recoveries, from the V-shaped recovery, the W-shaped recovery, C recoveries, K recoveries, I think demonstrate in one sense an extraordinary array of possible scenarios of how we will come out of this crisis, but also a degree of confusion and lack of clarity about how specific policy choices matter. And again, UNDP presented a policy brief just a few days ago that examined, from the perspective of what actually worked in this pandemic, the illustration of cash transfer schemes and the temporary basic incomes in a very broadly defined sense that were stood up, and how many millions of people actually did not fall into extreme poverty because these measures were put in place. We did that in part, and it's very early, rough research because of the lack of data, because we want to demonstrate that choices matter and policy directions have consequences that will last into the future for years to come. And they may either allow us to emerge out of this pandemic with something that we can truly, in maybe 20 years' time, regard as a turning point, as a pivot point for addressing these challenges that we're all very conscious of already, or as perhaps the greatest missed opportunity in history. And let me leave you with one figure just to demonstrate that. The IMF is likely to release in its board meeting in August a $650 billion special drawing rights. This is the greatest injection of capital through the IMF since 1945, and actually greater than the Marshall Plan in today's money. Now, the irony of this current regulatory framework is that most of that money will go to 11 high-income countries, $438 billion out of those 650. So the next few weeks leading up to the G20 summit, which is a catalyst for trying to perhaps redirect and repurpose and multiply these SDRs by finding a way in which they can be redirected towards low-income countries where fiscal space is so constrained, to perhaps address the climate change financing equation that currently is teetering on a crisis point, because we cannot find a way to bring the $100 billion together that would leverage $1 trillion in developing country investments to address climate change. It is as stark as that. We live in an extraordinary moment in history where choices also have extraordinary consequences well beyond where we usually would have this debate. And that is why I think our focus today on trying to understand how data can better inform us, empower citizens to judge, is so central. And again, thank you for inviting me. It's a great privilege to be with you. And again, I want to thank also Thomas and the team. We have not only thoroughly enjoyed this partnership, in which we have together invested in some of these opportunities, but actually look very much forward to doing more. Thank you. And Lucas, back to you.
Thank you so much, Akin, for these both inspiring and concerning introductory remarks. Let me straight away pass the floor to Thomas Piketty for his introductory words. We have 8 minutes.
Yes, thank you, Lucas. Thank you, Akin. Thanks a lot to everybody from UNDP, UN Statistics Division, and World Inequality Lab who have made this meeting possible. You know, it's great after the several years of partnerships that we can have this public meeting today. In a very, I mean, we are really meeting in a very complicated situation. I think, as Akin said, we are going to have more than ever, we are going to need, more information, certainly on inequality measurement, but most importantly, we are going to need to be able to define policies so as to find the adequate resources to invest in hospitals, invest in digital technologies, invest in environmental policies, and this will require, strong effort to build some norm of justice at the national, international level, which is not yet there. And I think, in addition to more inequality transparency, we also need to develop more indicators about tax justice, and in particular, when we talk about the reform of international taxation, the taxation of multinationals, the taxation of billionaires, etc. I very much agree with what Akin just said about the case of IMF drawing rights, is that we need to make clear that this is not just redistribution between the countries of the north, and that there is, a decent share that goes to the south. So, having said that, so where do we stand? If we think about inequality data for building forward better, where do we stand today? So let me say a few words. The general point I want to make in these first few words is, we've been making progress in our measurement of inequality, but we still need to make a lot more progress. We are still, in a very unsatisfactory situation. So in terms of progress, with the World Inequality Lab and with, dozens, hundreds of researchers around the world, we've been able to combine household survey data, tax data, national accounts, in such a way that we can now sort of offer this kind of world map of inequality. So here you have a very simple indicator, which is the top 10% income share. So if we were in a world of complete equality, the top 10% should have 10% of national income. If we were in a world of complete inequality, the top 10% should have 100% of national income. Now, in practice, of course, we are always in between 10 and 100, but what I want to stress is that we go from basically 20 to 70. So we go almost, we go, there's a huge variation in the level of inequality. So you have about 25 or say 25, 30% in countries like Sweden or in some countries in Europe, and you have up to 70% in countries like South Africa, or in Latin America, you are sometimes between 60 or 70%. It's even more striking if you look at the bottom 50% income share, which in many ways is more important, even more important. Now, bottom 50% income share, let's think about it. If we had complete equality, it should be 50%. And if we had complete inequality, it should be 0%. Now, in practice, of course, it's always between 0 and 50. In practice, it's roughly between 5 and 25. So, the most equal countries. So again, Sweden or Norway, you will have 20 to 25% of total income going to the bottom 50%, which means that, of course, they are poorer than average by definition. But if you are 50% of the population and you have 25% of total income, it means that on average, you have half of average income. So, you're poorer than average, but you're not hugely poorer than average. Now, in some countries, it's down to 5%. So South Africa is close to 5%, or in some Latin American countries, it's between 5 and 10. So what it means, so the first sort of lesson I want you to draw from this is that it goes from 5 to 25, so it moves from a factor of 1 to 5, which means that for same aggregate GDP or same average income per capita, the average income of the bottom 50% can actually move from a factor of 1 to 5. So the bottom line is distribution matters. It's not only about the aggregate. So for a same aggregate, different distribution can make the average income of the bottom 50% move from a factor of 1 to 5, which with, of course, enormous consequences on poverty rates and basic capabilities. So distribution is very important. And we've made some progress in our measurement of this. I think for the first time, we are able, I think, to compare at a world level these levels of inequality in a better way than before. In particular, in the past, some countries were measured only using household survey data, which means that inequality levels were underestimated as compared to countries with better administrative data. And this, I think, is better than what we had before. Now, this is better, but it's not enough. And so this is what I would like to stress now and to conclude. And I would also like to insist on the issue of tax justice and the measurement of tax justice, which I think is really very important in this post-COVID and this recovery period. So first, this is our inequality transparency index that we built with UNDP and the World Inequality Lab. So this goes from 0 to 20, basically. So we have some countries with 0, these are like Venezuela, Libya, Saudi Arabia, North Korea. So these are countries for which we have basically no distributional data, no proper household survey, and of course, no income tax data. So for these countries, all we could do was to do imputation based on regional averages or average distributional data for similar countries. There's not much we can do. But what I want to stress is that, there's no country in green on this map. So, our scale goes from 0 to 20 in order to get a grade of 17, 18, 19, 20. Basically, you will need to have high quality administrative data on wealth, in addition to high quality administrative data from the income tax, both on labor income, capital income. And the truth is that, there's no country, even in Sweden or in France or in the US, where we really have this high quality data that we would like to have. And in some cases, I would also like to say that, this is actually deteriorating. So it's important to realize that, we are supposed to live in the age of big data, which is certainly true for big private monopolies who are collecting our social network data to do lots of things with this data. But in terms of public statistics, we are often in the age of big opacity, in the sense that, for instance, when you have a tax reform in some countries which takes away capital income from the progressive income tax, well, very often the public statistics on capital income match with the individual level labor income tax data just disappears. So there are big limitations, and in some cases, this is actually deteriorating. There are also, examples of countries. For instance, in Africa, I was very glad to hear earlier today this session with the representative from the Statistical Institute of Mali, saying that we have a project with them in order to actually digitize their tax declaration, which would allow to supplement, you know, the standard household survey perspective with some salary income data and some better income data. And I was very lucky to visit Bamako just before the COVID lockdown last year. And you know, unfortunately, the collaboration did not make as much progress as we would like, partly because of the COVID, partly also because, you know, of course, we need partnership and collaboration, and we were very, you know, we very much welcome to continue our collaboration with UNDP in order to develop this kind of digitalization of tax declaration in particular. And this is the last point I would really like to stress, is that this is not just a matter of improving our data on inequality. It's also a matter about improving the policies themselves, and in particular the tax system itself. Because if you don't, like in Mali today, if you don't have any digital you know, data based on your salary income tax return or corporate income tax return, which just sit in paper format in the building which I visited in Bamako, you know, it's going to be very hard also to improve the working of the tax administration itself, and of our ability to monitor the progress and to better measure inequality. So this is a huge issue in the South, where I think enormous progress can be made with relatively limited financial investment. I also want to say, you know, from a political viewpoint, that it is also a huge issue in the North, where states and administration, you know, in theory, would have the capacity to make their tax system more transparent, but they don't always do it. So, you know, we live at a time right now where every government claims to care a lot about inequality, etc., etc. But, you know, in practice, I mean, I don't want to be mean with anyone, but, you know, it's not always so clear. You know, a few weeks ago, just to stop here, you know, we had this publication by ProPublica in the United States, you know, looking at the tax declaration of the top 400 billionaires in the US, which you know, we saw, you know, we are not really paying any federal income tax in the US, which is something that many of us, you know, my friends Emmanuel Saez, Gabriel Zuckman, had already worked on that, and of course Isser Boucher knows very well about that, and I know she's pushing hard to try to improve that. But, you know, you know, I think it's not only a US problem. Of course, it will be the same if we look at billionaire in France, or billionaire in Latin America, or billionaire in Africa. You know, how much did they pay in income tax over the past 10 years? And we cannot just be waiting for other media consortium of journalists to get some leak from tax administration. You know, this cannot be the proper way. We have to find another way. And I think, of course, the United Nations and the different national statistical institutes are in a very good position to help us, you know, with the academic community, push in this direction. We need to be able to access this administrative data, particularly on high income, high wealth, so as to be able to produce some public indicator on who is paying what, and so that we can design some system to finance for the, you know, the environmental and energy transition, the necessary investment in hospital and digital technologies in the year ahead.
Thank you very much, Thomas.
Thanks a lot for your attention.
Thank you so much, Thomas, for these introductory words. Next on line is Heather Boucher, and would be very keen to hear about what the US presidency is doing on this front of distributional statistics to do better policy. I know Heather have to leave in a few minutes, but I hope, Heather, you're still with us. And I hear that actually Heather had to move to another meeting, and hopefully she will be able to join us back before the end of the session. So I will straight away move on to Cristina Duarte with the following question. In this critical moment, how do you see the challenges of growth, of the inequality of this growth in a post-COVID world, and of data transparency or lack thereof in the case of Africa?
Thank you very much, Luca. Good morning from New York. It's a pleasure to participate in this event. Protocol observed. So in my 5 minutes, I hope to respect the time. I will touch very quickly in 4 issues. that from an African standpoint are critical to address inequality from a policy-making standpoint. The first issue, and of course are related to data and data on inequality. First issue, for economic growth to deliver development, political will is an important ingredient. And accurate data can make a huge contribution to promote this political will. This is my first issue. The conventional African story of the first 15 to 20 years of the 21st century was a very optimistic one as a result of high economic growth. However, the Africa rising narrative was mostly a story of economic growth based on GDP, which is overlaid one-dimensional. It is clear from a development experience that high economic growth is not enough to end the vicious cycle of poverty and to ensure inclusive prosperity. So, continuous emphasis on the same one-dimension framework will prevent Africa from tackling its development challenges and seizing emerging opportunities. So, while achieving development entails a reduction of poverty, decreasing poverty does not necessarily mean that a country has developed. And this is, I believe, is an important statement, not to say an important mindset. So I strongly believe that from an African standpoint, it's now time to end equating the business of managing poverty to development. They are two different animals. Africa must now shift its focus to retaining and creating wealth, better manage its own resources, and fostering inclusiveness. And this is a significant challenge. The result of managing poverty as managing development, I think, is a huge misunderstanding. The result is that the focus on poverty management, at the end of the day, has not left space for public policy to focus on growing and retaining Africa's wealth and deliver inclusiveness. So to make this shift, I do believe that data plays a crucial role in unpacking this issue. My second issue that I want to touch in my 5 minutes is human capital at the center of policymaking. The question that pops into my mind, can we afford another 50 years without putting human capital at the center of policymaking? In the past 50 years, human capital has not been at the center of policymaking worldwide. A generalized break of the social contract, and the result is that it pushed the planet quite close to a self-destruction mode in the long term from an environment standpoint. So for the next 50 years, income distribution should be the driver to deliver sustainable economic growth. So the terms of the equation have been reversed. So far, we heard we need economic growth to deliver income distribution. I do believe that the terms of this equation have been reversed. We need income distribution to deliver sustainable economic growth. And in my opinion, there is a need to change the policymaking mindset from backward design social policies to forward-looking human capital policies, so that we can move from assistance, a charity approach, to a clear recognition that human capital policies should be designed to generate social, economic, environment, and culture returns. And for such to happen, accurate data is crucial. COVID-19 has just created, I believe, a strong opportunity to place human capital at the center of policymaking. So, and in moving from traditional backward social policies to forward-looking human capital policies, the massive adoption of technology and innovation is a must. Digital divide amplifies inequality. My third issue that I'd like to raise here very quickly, financing for development. always from an African standpoint. The imperative from an African policymakers making standpoint to own the economic, financial, and fiscal flows. Most of the African countries, particularly those engaged in commodity export, have the fundamentals to run positive primary balance on a consistent basis. The reality, however, has been just the opposite. Persistent negative primary balances over time, in my humble opinion, are a very good indication of the lack of control over economic, financial, and fiscal flows, and as a result, can signal the existence of channels through which domestic savings outflow the country instead of financing a national development. So in my humble opinion, we need to distinguish finance for development short and palliative solutions, which are important, the ones that we are adopting to address COVID-19 challenge, from addressing the root causes from a long-term perspective. And the tip of this iceberg, from an African standpoint, are the $88 billion in illicit financial flows. This signal an issue in terms of ownership of economic, financial, and fiscal flows as the precondition to give the driver's seat to domestic resource mobilization with well-structured tax systems based on state-of-the-art ICT. The fourth and final issue is regarding the role of intangible assets in the development process. And I'm referring to development and accountable institution as an important intangible asset in the development process, and data transparency. Data is an asset, is an intangible asset, but as of today is an intangible asset, is an important intangible asset in the development process. The reality is that institutions, while evolving positive in some countries in Africa, continue to be a critical constraint for Africa's transformation, with deep implications for governance, competitiveness, natural resource management, and infrastructure management. I would like to be open and to give a very basic examples that I have been providing, particularly in delivering remarks in the academic environments for students. A basic example based on my experience as Minister of Finance and Planning. Let's take a road construction. If we build a road, but we do not create institutional and policy framework to own and manage the road, that same road will be built 100 times, making the infrastructure process in Africa just a huge market opportunity for big construction companies and related financial institutions, while impacting negatively on the quality of the public debt that is sustaining such investments. In this context, data and data transparency becomes crucial to address this issue. In
Christina,
the past years,
I'm sorry to say that I'm cued to move on to Elliot Harris in just a few moments. Thank you so much.
Can I conclude my sentence? Is the last one?
Please, please.
So in the past 10 years, the huge deficit of accurate data might have contributed to the generation of economic growth without inclusiveness. Why I say so? No data, no reality. So the status quo is, if you deliver high economic growth and you are classified as a stable debt country, you are considered a good student in the class. If you add to this picture the inequality that this economic growth has generated, the picture will change dramatically. Thank you, Lucas. Thank you.
Thank you so much, Christina. Let's straight away move on to Elliot Harris. And my question will be simple. How would the distributional national accounts, in your view, inform the broader Sustainable Development Goal agenda? Elliot, you're muted.
Yeah, I've been doing this for 1.5 years. You'd think I'd know how to do it by now. I see Achim also suffers from this. Thank you, Luca. Let me start off by saying that we have a special Sustainable Development Goal, number 10, that is about reducing inequalities, not only in income, but inequalities based on different group characteristics: age, sex, disability, race, ethnicity, origin, and so on. Clearly, having specific disaggregated information on inequality is critical to understanding the progress we are or are not making toward that specific SDG. But the second point that's more important, I think, is that if you look at the first 7 SDGs, let's take out SDG 5 for a moment on gender empowerment and equality, and we look at poverty, food, healthcare, education, water and sanitation, energy. Well, all of these people-based SDGs, if you will, depend on income and payment. These services are, for the most part, not provided by governments to all citizens on an equal basis. They have to be purchased. And so, of course, an inequitable distribution of income necessarily means that individuals have differentiated capacities to reach these fundamental SDGs. And so, with the core principle of leaving no one behind, it's clear that we have to have information about the distribution of income and of consumption and of access to these services if we're to understand who is at risk of being left behind, and if we're to have a hope of effectively targeting public interventions to address these problems of access and to make sure that no one is left behind. A third thing, though, that I think is perhaps not as often in the public debate is that the Sustainable Development Agenda, by its very nature, is a forward-looking one. We're not just concerned with the level of prosperity or well-being that we have today or the current state of the planet, if you will. We're looking at the future, the prospects for the future. And in particular, in this social dimension of sustainable development, it's important that we consider intergenerational dynamics. We know there have been countless studies that show that unless you address income inequality now, that inequality perpetuates itself from one generation to the next. And the differences in inequality in income also affect access to services, opportunities, and consequently condition the standard of living, the degree of well-being of the people who are suffering from the income inequality, and that suffering deepens over time unless it's corrected for. Now, this is why I think distributional data and data on income inequality in particular are so very, very important, because it allows to fully understand who is being affected adversely by the way income is being distributed. And that has to be then the evidence base for effective policy. Without that, you can end up doing things that might on paper look effective, but in fact aren't. Perhaps the most egregious example of that is if we think about progressive taxation as a way of correcting for some of the distributional inequities that we face. And these are things that might work very, very well in a formalized society where most people are working for wages in the formal sector and the government is aware of who is earning what. And most countries do have some form of progressive taxation in place. Some of them have tax exemptions for dependents and so on and so forth, all of which are intended to correct the level of disposable income after taxation and equalize it a bit. But that does not work for somebody who doesn't pay taxes. And in many developing countries, unfortunately, we have very highly informalized structures that mean that many people are beyond the reach of the tax authorities. That kind of anti-income inequality policy doesn't work. And this is why the information of who is affected is so critical if we want to have any form of effective intervention to correct for that inequality. And without that, the inequality will perpetuate itself. I think the last thing I'd like to say about data is that it is really important to have an objective evidence base to build up an informed public debate around these key socioeconomic issues. We have inequality because people benefit from it. Let there be no doubt about it. This doesn't just happen. It is deliberate. And policy that doesn't address inequality doesn't address the inequality because there are vested interests to prevent that from happening. We need to build a social consensus around what is going on and what needs to be done to ensure that nobody is left behind. And in order to do that, we need to understand not only what are the different levels of income, but how those different levels of income translate into differentiated access to goods and services and to consumption. Now, for example, somebody who's in a high-paying job with full health insurance coverage has no way of understanding on a personal level the kinds of difficult healthcare choices a low-income earner has to make whose job doesn't provide health insurance. Understanding those imperatives can sometimes change people's minds, can make people understand why it's necessary to address inequality. And secondly, I think we also need to understand, when we look at the sustainability agenda, how we will have to change our own behavior, our own choices, and understanding what the implications of those choices are in terms of consumption, the use of resources, the footprint that we have at different levels of consumption and different levels of income. That will, I think, be very important for us as we look forward and try to make the kinds of changes that we need for us to actually realize SDG 12 on sustainable consumption production and create the basis then for sustainability going forward. Thank you very much.
Thank you so much, Elliot, for connecting the SDG Inequality 10.1 goal to the broader sustainability framework. I would like to ask whether Akim, Thomas, Christina want to have very short reactions, 1 minute each, on what has been said overall, and would like to ask the audience to maybe ask questions in the chat if some questions arise. Thomas, Akim, perhaps you would like to comment. Akim?
Sorry, Luca, I thought maybe at the end, and perhaps if you have questions or comments from many of the participants, much happy to give some room to them and come back maybe at the end with a minute. Thank you.
Excellent.
Maybe let me just say a word about what Elliot just said, which I think is particularly important about the informal sector and the informal economy, because I think this is one of the dimensions on which we actually can have an impact, because the boundaries of the formal versus informal sector, of course, is not something that comes from the sky. You know, it comes from specific policies or lack of policy. And I think in particular, you know, I was talking about the digitalization of tax declaration in a country like Mali before. I think probably one of the big mistakes that was made in the past, which I think economists have a responsibility for that, is the lack of attention to the property taxation and the registration of business assets, you know, before we can move to income taxation or profit taxation or value-added taxation. If you look at 19th century tax system in the US or in France or in Britain, it all started with, you know, basic property tax, so that you register all business assets, you know, even a small piece of land, a small shop, a small, you know, fabric, whatever, even if it's a very small tax, but you know who's there and who's doing what, and then you can ask people, you know, to have accounts and where they report income, but you know, that's a lot more complicated if you don't start from a system where you know who's producing what, where, with what asset, and you go directly to income tax, whatever, then you end up with an informal sector that's 3/4 of the economy. And as you were saying, Elliot, then your tool is actually not a tool to reduce inequality or to do anything. So here, this is an example where I think also sometimes the ideology of economists that were very much anti-wealth tax and property tax historically, and sometimes anti-progressive tax and anti-tax and government in general, you know, had a bad impact. But you know, what matters is the future, and I think this is an area where it's possible to make a difference by working with the tax administration in Mali, in other countries, to help, you know, sort of move ahead in a sort of better direction.
Thank you very much, Thomas. Picking up on this question of taxation, there's a question in the chat on where do we stand with respect to available data regarding the corporate tax? And perhaps we can extend this question to corporate taxation, but also wealth taxation, and to the question of financial opacity when it comes to flows of wealth between countries. Perhaps Christina, Thomas, or other speakers may want to intervene on this.
I think it's better for Thomas to, he has been studying this.
Well, you know, I think, Christina, what you'd say during your intervention about illicit financial flows, and, you know, I think is really right on target. You know, I think you know, the G20 and OECD, you know, have made lots of announcements and some limited progress about automatic transmission of information about cross-border financial assets. But again, we lack good indicators to measure really how much progress was made in policy. Because in the end, the objective of having more transmission of information about cross-border assets was not just for the pleasure of having information. The question is, are we using this information? Are the tax administration using the information, and can they release, can the tax administration, including first with the richest countries in OECD, release information about how many people by wealth bracket, with very high wealth bracket, were not reporting their assets 5 years ago and now are reporting their assets, and how much this has contributed to change the tax payment made by different wealth bracket. I mean, we don't need names, of course, we just want statistical information, but we want very granular statistical information so that, again, we don't have to rely on, journalists and media like ProPublica to tell us what's going on. I mean, I'm very happy that journalists are playing their role, of course, but we cannot just rely on leaked information. We want officially produced public information. And despite all the announcements that were made at the G20 level and OECD over the past 10 years, I'm afraid that, we're still relying more on ProPublica than the tax administration of the US or France to get this kind of information.
If I could just jump in there, what we see in the news are reports about the relatively small amounts that the very, very wealthy individuals and large corporations are paying. What we don't see, though, is the extent to which all of this is might be perfectly legal, might be taking advantage of the provisions of the tax code. Now, speaking personally, I remember when I was a very young economist and didn't have much income, my taxes were a very simple affair. I could do it in half an hour. As you grow older, as you accumulate wealth, you start to have more complicated taxes, but you also have a whole lot more possibilities to avoid the taxes, to take advantage of provisions of the tax code. And I think that is something that we have to talk about honestly. We have, at least in the OECD countries, very complicated tax codes that make it possible for individuals and corporations to perfectly legally pay less taxes. And perhaps that is something that we should all think about very consistently. Is that the best way to run a tax code? Now, of course, a lot of it may depend on the use of taxes as an instrument of incentives. And I'd be the first one to agree that that is one way in which governments can incentivize changing behavior. But again, we have to bear in mind that in many cases, the way in which we provide the ability for companies to sort of write off certain types of expenditures or avoid having to pay taxes on certain types of investments, that just encourages a more complex system. And then one ends up with a system in which very smart tax lawyers are able to avoid most of what might be otherwise a tax burden. I think that is something that may not be a major issue in some countries where we don't have large international companies that are responsible for a major share of the gross domestic product, or the gross national product, better put. But on the other hand, the fact that we are seriously considering a minimum corporate tax shows that there's a sense that too much of the income generated by our economies is being generated beyond the reach of the tax system. And that, of course, is a tremendous disadvantage for any effort to finance the SDGs. Thank you.
Thank you very much, Elliot. And I see Christina raised her hand. And I'm just also trying to pass here one question from the chat, which is more on the politics of these reforms. On which groups of the population can policymakers stand to pass on these important reforms on the tax system, for instance?
Two issues, Luca. First, commenting what Thomas Piketty said about illicit financial flows. My position is very simple. We do not have the perfect data regarding illicit financial flows. Even the concept is discussed. But we do have enough data to act. We do have enough data to act. We don't need the perfect data to address the lack of international tax cooperation. This is, I think, is an important. Second, data and let's say tax systems. My experience in Cape Verde, when addressing the inequality from a fiscal standpoint, usually you have two main sets of options: increase the efficiency of your tax administration and to act on your tax structure. Believe me, The low-hanging fruit on the tree is tax administration efficiency. By digitalizing tax administration in Cape Verde, I was in a position to cross data on the backstage and just spot how corporations were manipulating data between income corporation declarations and VAT. Under income declarations, they were completely on the red, no money to pay, nothing. If we go to the VAT data, you cross, they were all very profitable business. This is the issues that I want to very quickly look at to put on the table. Thank you.
Thank you very much, Christina. We have 4 minutes left. I saw Thomas raise his hand. Perhaps Akim want to say a word. So Akim, please, the floor is yours.
So very briefly, because I'm sure Thomas will have a very exciting view of how we move on from here. But let me just pick up also on, we've discussed corporate taxes. I think one of the interesting questions is always, what is the political economy of a certain tax regime? And I think it is very welcome that we are now at a point where we are looking at corporate taxation as not being something that is being played out to the advantage of those who do not want to pay taxes or are trying to avoid taxes. There is, however, a corollary here that I wonder how far that data has also been analyzed. For many developing countries, emerging markets, tax may be a competitive factor in terms of location of businesses. And while from a tax equity and distributional point of view, you obviously don't want tax avoidance, but if you are attracting a major corporation and still have a net revenue gain in absolute terms, I think we will still have to see how, the 137, I think, or 130 countries that have now signed up, there will also be countries there who perhaps may lose an opportunity where others have had it. And, amongst the industrialized countries, the more mature markets, we are talking about a 1.5% increase or differentiation in tax to get to the 15%. Another element that I just want to leave you with is, in looking at wealth and inequality and relating that also to tax and income, one of the areas that I think we all need to pay more attention to, and again, it's a sort of broadening of that lens on data, is how we also shift tax paradigms. I mean, a lot of the work, Omar, that you have done and that we rely on in terms of today's world is related to income. Yet one of the things that we are also increasingly appreciative of is that our tax paradigm is focusing essentially on good things like labor, jobs, and work, and not paying enough attention to how you can tax the bad things, be they pollution or whatever else. And what would be the equity or inequality and distributional impacts of such a shift in tax paradigms? I only leave you with that because that is really the focus of much of our UNDP, let's say, thought leadership thinking now, because we have to move into an economic paradigm where these parallel universes of economic progress measured in GDP, social equity and social safety nets and so on, welfare systems, and then the environmental dimensions are essentially operated as separate operating systems. This has brought us to the point of where we are in the 21st century, essentially an economy that can keep on growing at these ludicrous rates, leaving a lot more poor people behind and destroying the very life support systems on the planet on which we depend. And I think, the intersection of the kind of work that you're doing in the World Inequality Lab in itself, just like we in UNDP and with the Human Development Board, have to evolve our, let's say, lens with which we look at tax as a paradigm that reflects a political economy, but also a moment in time where we have to shift economic signals. Thank you so much. It's been a real privilege to listen. Thank you.
Lucas, on t'entend pas là, Lucas.
Thank you very much, Thomas, and thank you, Akim, for these closing remarks, which I think will be the final words of this conference. We need to think about these issues in a systemic way. Otherwise, we will not be able to solve the issues, the problems that we've identified today, neither from the measurement side nor from the political economy side. So Thank you very much to all speakers of this round table. Unfortunately, Heather Boucher was not able to speak. We hope to have other occasions to exchange with her. I'm sure we will. I would like to thank again the United Nations Development Programme, the Statistics Division for partnering on this great conference, all the speakers of this roundtable and the previous session, as well as all the audience. Let me wish you an excellent end of the day. Thank you very much for attending this conference.
Thanks a lot to everybody. Bye-bye.
Pleasure.